Well, good morning, ladies and gentlemen, and welcome to today's Build to Rent V Summit. I'm Adam DeMarco. I'm the founder and chief executive here at the Urban Developer, and I'll be your host for today's session. We'd like to acknowledge the traditional owners of country throughout Australia and recognise their continuing connection to land, waters, and culture. We pay our respects to their elders past, present, and emerging. On behalf of our partners, Salto Systems, Fender Catsaleaders, and Walter Consulting Group, along with our supporter partners, Gigafy and Argus Estate Master, we'd like to formally welcome you all here to our V Summit today. To all of our partners, we thank you for all of your support, and you'll be hearing from some of their key people over the course of this day. As always, we encourage you to support the businesses that support us. Now, this session today has been hotly anticipated. Now, why? Increasing investor appetite and tenant demand have improved the fundamentals of build-to-rent assets, which are well positioned to meet the challenges of the COVID-19 or post-COVID-19 environment. As investors look for resilience and private developers shift to meet the needs of a growing housing supply crisis, institutional residential assets will play an important role in meeting future demand. During the past 5 years, a pipeline of now completed build-to-rent projects has emerged, providing evidence that the model works indeed on our shores. So what does the future hold for build-to-rent real estate in Australia? Over the course of today, we've brought together some of the country's leading players and experts to understand precisely what is happening in this very exciting sector. As you can see there, we'll be exploring 6 sessions throughout the course of the day. All of the details about session times, speakers, and more can be found within the digital program that we've sent to you. Just a reminder as well, all of these sessions are available and will be available to you on demand after the fact. So if you've got any notes to take and you forget to take them, please don't stress out. You'll get recorded versions of that as well. You'll have the opportunity to submit your questions through the Q&A function down at the bottom of the screen, and I'll do my very best to moderate all of them. Send them through at any time. Have a chat with those that are in attendance as well. And as I said, you'll be receiving recorded versions along with a survey after the event. Now, just finally, your support of this event is helping us to continue to deliver independent news to the entire property industry. On behalf of all of our team at the Urban Developer, we thank you for your ongoing support. Let's get into it. Now, I'm delighted to kick off this particular session with Paul Winstanley. He's the head of research at the very well-renowned JLL. He's been a very busy character, both here in Australia and across the ditch in New Zealand, where you join us from as well, Paul. Good morning, and thank you for joining us.
Good morning. Yeah, absolutely.
Now, before we jump into it, we're doing things a little bit differently this V Summit. For those that have tuned into previous ones, we're going to kick off every session with a poll. And the poll's asking all of you a question, which relates back to the presentation that we're having. Now, I'll get our producers to just put the poll forward for us this morning. And given that your presentation, Paul, is on the state of the build-to-rent sector here in Australia, we do want to ask that question. Send it forward if you can, guys. The question which relates, and I actually can't see it for whatever reason. So what is the state of the build-to-rent sector here in Australia? And we hope you see it in front of you there. I'd like you to answer all of those questions, and I'll do my very, very best at the end of it to answer those questions. Paul, I'll let you start sharing your screen and kicking things off. Welcome, and thanks for joining us.
Brilliant. Thanks ever so much. I will, hopefully that's now working. We can see my screen all right. It's brilliant to be here. Thank you ever so much for the opportunity to talk today. Is my, oh, here we go. My screen should be sharing now. There we go. As I say, thank you so much for obviously asking me to talk today. I think it's been a fascinating 12 months since I last talked at the Urban Developer event last year. And I think we've come on an awful long way as an industry in Australia, really started to make real inroads into what build to rent is going to look like as we go forward. So what I'd like to start today's thinking about is what does normality look like when we get beyond COVID? What does 2024 look like? I'm picking 2024 off the top of my head as a year, but if we all imagine,
Paul, do you mind if I just jump in? So we're just actually seeing we're just actually seeing your notes, and we can see the screen behind that as well. So just before you reveal all of your trade secrets, we might get you to come in. Now, for those that are coming in and sort of poking a little bit of fun at our questions, they are a little bit controversial. They are a little bit of fun, as well as being serious questions. So have a go at your best answers, and we'll come back and have a look at the results after Paul's presentation.
Right, I'm hoping now this has got the right share. Is it still the same problem?
No, it's that's fine. That's fine.
Excellent. Thank you very much.
Except, sorry, mate, we've just lost you again. So would you mind sharing your screen again one more time?
Gosh, we'll get there eventually, won't we? Is that okay now?
Third time lucky. Over to you.
Right, brilliant. Thank you very much. So, yeah, what I was saying was, if we go forward to 2024 and we look at post-COVID, we've got our international borders are open, build-to-rent schemes are up and running, and what can we really start to think about that we need to do now to make sure that that becomes a reality by the time that we get normality? By then, we will hopefully have the stock that's available and up and running, that customers are really going to be starting to experience that difference that build to rent can offer them as a rental experience. But also, hopefully by then, we will also see that the federal and the state governments will really get a clear understanding of what all the fuss is about that we've all been talking about for all these years, and actually that we are delivering a much better way to rent for customers. But we don't actually have to look to sort of to guess what it's going to look like, because if we look back to the UK model, by 2015 we were about where we will likely be in Australia in 2024, where we had schemes up and running. People were really starting to understand the sector, and actually that was the point at which the sector truly took off. So I think there is so much positivity to look at now as to where we could be going in future. So what I wanted to talk to you about today really was to look at why are we where we are, and what can we expect to see going forward. Well, I mean, I think that the demographic story for Australia is still absolutely as good as it was 12 months ago, 2 years ago, 5 years ago. The demographics are very strong. We have strong growth, we have good age profiles, and we have housing affordability problems across all of the urban centres. You know, it hasn't worked in the past to the extent that we probably all thought it would have done, because the investment market for mum and dad owners has been much more positive, and that has really changed over the last few years with the restrictions on investors, and also, more importantly, the real rise of the living sector around the world. And I think that we're now at a position where the scales are now in fine balance between investors needing build to rent because the core sectors are now not providing enough diversity, they're not providing enough opportunity. And actually, certainly in the case of office and retail, the risks have changed over the last couple of years, certainly with COVID. Whereas residential is very much of a needs-based asset, and it's very much on the radar for so many more institutions, almost on a daily or a weekly basis. I think the other thing to point out now in terms of the key arguments is that governments actually do need build to rent to work. We've seen support in New South Wales, we've seen support in Victoria, and that's really important because ultimately governments are realizing that the housing crisis is not going to solve itself, and just relying on developers to keep building strata stock isn't going to work. We can see that in the apartment pipelines, which I'll be referring to later in the presentation. But I think the other thing is that renters also need build to rent, because the Australian rental experience is not as good as it could be. It's very inconsistent. It's very dependent on the individual landlord's intentions. And actually that's meaning that that ability to be a true customer isn't really working. So all of those really are combining together. I think though what we do need to still consider is that there's still a bit too much debate in my mind in terms of looking at where we are about what actually build to rent is. I still hear and still get questions continually about whether it is an affordable housing product, is it a luxury only product? And I think it's generally got too confusing. At its heart though, build to rent is all about, it's about the product, and it's about the people, and it's about the experience, and it's about that vision. it's not just about property. And I think that is starting to get lost in some of the narrative that we're hearing. I think generally at its heart, the people who are doing it the best and the people who are really making the inroads that will really set up Build to Rent for the future are people who are looking at it very much with the heart and looking to put the customer first and deliver that customer experience, knowing that if they get that right, we've already seen in the UK, the financial metrics then follow. The rents are more attractive, the occupancy is lower, and the customer satisfaction is high, and they then tell all their friends and people stay, and it becomes a real experience. I think what I do still see in Build to Rent is there is this affordable argument that we keep talking about. It's not affordable housing, it's a market product. There may be elements of it that will really translate so well into a more affordable product down the line. But the other thing is that I do still see a lot of developers looking at Build to Rent as a way out of schemes that were purposely designed and built and thought about for strata titling, and actually they just want to use it as a way to get to market. Whereas actually the Build to Rent that I see and the Build to Rent that I work in is very much all about that customer first and not the property first. So I think that is still something we need to work on as an industry. I think in terms of how it's evolving, I think Build to Rent has absolutely evolved over the last 12 months. It's in a good way. I think it's almost unrecognizable. A lot of the discussions I now have on the projects I'm working on is much about, it's going about how it's going to be managed, how it's going to be delivered, what the vision is, how the investors are going to really deliver that experience. And certainly I think that concept and that narrative is really being shown from the benefits of taking that approach overseas. And we're now really starting to see that in Australia. Obviously, it's not appropriate for me to mention the parties who I think are doing it better than others, but they will know who they are. It's the people who really see it as a clear opportunity to really make a difference in people's lives. And that is how I see that it's evolving. It's not about the size of the gym. It's not about necessarily the size of the amenity space. It's about the customer service, and it's about those frontline staff really helping to drive an experience. And that's where we're seeing the holistic approach coming on in the designs that I'm working from. I think that the investment thesis remains as clear as it ever was. We have strong population growth. I mean, obviously everyone will get these slides, so I'm not going to read them all out, but we have got strong population growth. We've got considerable housing affordability constraints, and we've got very clear demographic drivers. And we also have a real lack of purpose-built rental product. Obviously, we have a lot of our strata title product is rented, but again, it goes back to that inconsistency. It goes back to that the lack of people-focused and occupation-focused accommodation, which people really get a lot out of living in. And I think that's what we will now see as more schemes open in the next 12 months. We will have all of the major players really starting to move close, if not opening, to their first big schemes that are purposely designed as Build to Rent products. That's going to be a game changer. So when we look at the state of the market, when we talk and we come back next year and have a conference like this, we will be talking about more and more people who actually live in Build to Rent products, and we'll be starting to really see how the market is engaging with this new and exciting product that is obviously very few and far between at the moment. I think one thing I would say, though, in terms of where these products are, I think we can't underestimate how important the location is still to investors who are looking at Build to Rent. And when I talk about location, what I'm actually meaning about is the practical location at a micro market level. This doesn't have to be in the prime residential locations. Build to Rent at its heart is all about practicality. So it's all about making sure that you're in the right place at the right product size and with the right infrastructure, so you can really offer a practical location where your residents can go about their daily business. They can also benefit from the amenities in the local area and within the scheme, and also crucially, obviously, target an easy way to get to the areas of the biggest employment. So those locations are becoming really, really critical. And I would also emphasize in all the work that I've done with investors and developers, it's not a case of any scheme or any location can be built to rent. It really has to be thought through, and those locations do have to be really fit for purpose, because a lot of the investor group interested in the sector are absolutely risk averse, and we need to bear that in mind. They want to be in the best locations and the most fit for purpose locations, whether that be a middle market, mid or upper or luxury market that they're aiming at. It doesn't really matter, as long as the demographics and the underpin are fit for that location. And I think that's going to be really, really important going forward. We know that our macro economic outlook is pretty good looking forward. Obviously, this is searching forward into effectively a post-COVID world, where we can see that we're expecting faster growth than most global economies, and we've obviously dealt with COVID, bar the obviously current lockdowns that I know we're all dealing with both in Australia and in New Zealand. We've dealt with it comparatively well, and that the opportunity for immigration once borders open is going to be really strong. So the forecast still put Australia in a very good position, and we do need to take advantage of that. But again, it will be those locations where those people are going to look at that are going to be critical. I mean, again, I'm not going to go over this in great detail. I'll share the slides, but we know that migration levels, renter age groups look good. And Sydney and Melbourne are likely to be the first ports of call, just because that's what they always have been. Although I can also see, I'm certainly doing a lot more work in the likes of Brisbane and Canberra, and hoping to do more in Perth, because I think they're good opportunities as well. And I think as we diversify, we will see those locations spinning out. And we also know it's going to be no surprise to anybody that housing affordability continues to be an issue, and more people are renting, and that's forecast to continue. Certainly as we go, if we do get to the levels of immigration and population growth that we're forecasting, a lot of these people are going to need somewhere to live, and they will absolutely be their first port of call will be rental housing. And then finally, for this sort of looking at the way location is really playing in, there's a very, very clear supply gap coming, that has been coming, and we've known about for a long time, in the sort of strata pipeline of apartments across the country, really, that our pipelines have got smaller and smaller, and we really do need build to rent to come in and to fill the gap, really, because if you plot the pipeline against the growth in population, it gives a real supply gap, as this illustration shows. And I think that's large part. And then the final one on this sort of this sort of data is looking at vacancy, and vacancy has started to rebound, as you would expect. Obviously, we're not in a normal market yet. That's still some months and some months away until we get borders open and we get a much more normality with who lives in the city centre and why. We get the students back. There's a lot still to come, but we have already seen vacancy levels improving, and we very much forecast there to be a rebound again when the borders open. And then finally, in terms of this location element, we know that rents and CPI have a very, very strong relationship. So when we're underwriting our models for growth in future, we know that we can look at income growth and CPI, which is a really good guide, again, factoring into that location as to where people are most likely to be looking. I think the next thing really to think about that is really impacting the market at the moment is looking at innovation. And how actually build to rent at its heart is a very innovative product. It is bringing something to the market that hasn't been here before, and that we really need to make sure that we are aware that we are still pushing those boundaries, and there is a no one size fits all. And this is where, to me, that innovation is all about taking the best learnings from overseas, the best learnings from Australia that we've got, but really putting them into a local market context. To me, it's all about understanding that local market and making sure that the product is tailored for the very practical location you're in, and not just cookie cuttered copying schemes from other areas and hoping for the best. It's very much of an innovative. It's very much about making sure that your product and your vision resonates with the local market, and also wherever possible you are dragging you're targeting customers from other areas of a city to really want to live and experience in your in your scheme, which then is going to obviously help with the financials. I think we do have an opportunity, and I'm sure I've talked about this before if anyone's seen me talk about the opportunity to really enhance the customer experiences at the heart of Build to Rent. And as I said earlier in my presentation, anybody who's looking at this particularly seriously and particularly with a really good vision is putting the customer first. And I think we can't underestimate how important that's going to be, whether it be looking at the affordability of the quality and making sure it's convenient. All of these things on this slide are really, really important to making sure that we go above and beyond to really establish Build to Rent in Australia as the rental product of choice, really. And if we combine that as an industry, then we will start to gather more and more momentum, as has been seen overseas. And certainly that's how really we've got to 180,000 units or so in the pipeline in the UK from pretty much zero in 2013. But you do need to get that sort of coherence across the industry, understanding that. And then the education piece is really important as well. I would say that this arguably for everybody who's interested in the sector over the next 2 to 3 years is going to be one of our key focal points. It's a bit of an X factor, but we need to make sure that both the market is educated in what Build to Rent is, but also that the governments are educated and understand what we're bringing to the table and how we have to really show what we can give, because ultimately that's going to be how we maximize our potential, by educating people. I've talked about this quite a lot because I know I'm wrapping up now, but the vision element is vital for Build to Rent. I can't emphasize how important, and I know I've mentioned it on several occasions in the last 20 minutes or so, that having a very clear vision and really understanding what you're trying to develop is absolutely critical to, and what will separate the schemes that do really, really well to the schemes that just do okay. And that vision is certainly what I'm seeing from the key investors who are involved in our market. So I'm really encouraged and I'm really positive about the direction we're going. And then the final one that I really want to emphasize is actually we have to do this properly. We have to deliver it. And we have to be very clear that when we're managing it, we are delivering what we've said to people we're going to deliver, because it's all right having a great vision, but making sure that's backed up with the management processes and the customer journeys, and really making it an experience from start to finish will start to really make the most of Build to Rent. So if you put all of these together, I think it actually it's quite holistic to sort of put all together and think, what does this mean? But the reason I've chosen these, and it is very corny, and I apologize for that, but if you look at all the things, the key ingredient that we all are going to have for making it work is that we're going to have to believe in the sector, because ultimately it is always going to be very difficult on a line by line basis to make viability stack up. But ultimately, it's the belief that that customer service and that offer will offer something that's an X factor in the market and will really separate the Build to Rent rental market from the mum and dad renter market and really make a difference to housing in Australia. And I think that's me, really. Thank you very much for listening. Obviously, delighted to take any questions.
Thank you very much, Paul. I'll get you to jump out of your screen there so we can do a couple of things. One is have a chat, and also give you a bit of context in terms of what the audience's opinions were of our first poll question. I'll get our producers to put that forward and show the results. I think it's really interesting. How would you describe the state of the Build to Rent sector in Australia? Four answers: underpriced and undervalued, overhyped and overheated, fair value for money, no idea whatsoever. I think we had almost 300 responses to this. And I think this is an interesting place to start, Paul, where, there's a lot of different opinions about where it's going and where it is right now. And I think something that I'm really interested in is your experiences over in the United Kingdom. And I know it's not a like for like comparison, but just tell us about, they're probably 5 to 7 years ahead of our sort of pipeline, our journey there. Just tell us about how that sector transpired over that 5 or 6 years and what's relevant to us here in Australia.
Yeah, I think it's a really good point. And I think that poll is really interesting on the basis that it's almost an even split. I know it's not exactly even, but I think it totally depends on what particular element of build to rent you're looking at. I mean, the UK was an incredibly not strange story, but we started out of a global financial crisis. It probably wouldn't have happened how it had done without that, because mum and dad investors were driving the market very similar to Australia. And then we had government support, and then suddenly the institutions got involved, and it grew and grew and grew, and pipelines grew. I think I feel like we're now sitting in about 2013, 2014 in UK terms. And the biggest growth factor was probably from 2016 onwards, where it really grew and the momentum grew, and there was literally thousands of units coming through the pipeline. But the difference between that was, to me, the importance of getting the customers on board, and people started to really realize there was a difference, and that renting was a different option. And I think we've now got to prove that to the Australian market. And then also we need to prove the returns and those to the investors, so that they will get confidence, because a lot of the situation we're still at now is it's still unproven. So I think it's no surprise on that poll that people are saying, is it overvalued? Is it undervalued? Because we don't know until we've got it open. We know that it's a premium product, and we absolutely suspect that people will pay for that because they have done in other countries, but we'll have to wait and see.
It's an interesting thing you say there, which is it's a premium product, because at the same time, we've got questions coming in around community housing being component parts of it. And I know that we've got others here later on in the day where we're talking about the different mixes. Can you just, expand on that notion of it being a premium product? And is that just a function of now, or is that the sector in general over time?
I'm very careful when I use the word premium, because people often talk about a premium rent, which I genuinely don't like to do at all, because I think when we're talking about a premium product, we're talking about it being a product that is different to the mum and dad offer that's out there. So by that, it's much more consistent, it's much more reliable, it's got much more certainty of tenure. And they're the kind of things that I see as premium. Obviously, yes, you've got your gyms and your amenities, and people think that's more luxury. But the fact that it's a premium rental product, to me, is all about the service, and it's all about the offer. Now, there's absolutely no reason why at the more affordable level, you can't take those aspects and put that into a rental product, because that's people management, that's looking after people as customers, which surely as we go forward needs to be the mantra for any rental property. Whereas the level of amenity is a different argument, and that suits the practical market. But when I'm talking about a premium market, it's just how you view the product. I think this will be a better rental product and a better rental experience than other competing individual strata title apartments.
Which goes on to my next question, which is really about this interplay between the build to sell and the build to rent sector, and where that happy equilibrium lies. Like, if you were to say, take us forward 10 years, give us a feel for what the mix is between total apartment supply in this country and what proportion of them are build to rent versus build to sell. And I guess to what extent then does the investor-led build to sell part of the marketplace start to taper away?
It's very interesting, because we know there's been evidence or research done in Australia to look at people do prefer to own houses rather than apartments. So the build to sell apartment market is always competing against the build to sell, or the house and the land market anyway. You then put onto that the fact that investors have been and will continue to be the large underpin for strata schemes. I mean, there's a lot of rental product out there, and so therefore, in order to answer your question, what we will look like in 10 years will largely depend on what the state and Commonwealth governments do about whether they're going to encourage or not encourage individual investment, because that will ultimately drive the interest in strata title. Whereas the thing about build to rent investors is they're in it for the long term. I'm talking about ones with vision and long term, and the investors we're talking about, the global capital. So they are very much they're quite a safe bet from a government's perspective, because they're in it for the long term. They want to provide certainty of tenure. They want all of their apartments to be let. So it could be a really vital cornerstone of our rental market. But I think in order to answer your question, it all depends on what settings the politicians decide to put over the bill to sell in terms of the attractiveness of individual rental investment. And that almost isn't to do with our community and build to rent, because we're kind of going off on our own direction.
Yeah, and you see how susceptible the international market and international buyers are to things like stamp duty and other elements of the build to sell sector. So I guess that what you're saying there is there's a greater exposure to policy settings on the build to sell side in the short term than there are on the build to rent side. Awesome stuff. Just final question, I guess, as we go through this, if you had to then sort of pick a particular segment of the build to rent sector to play in, whether it be a location, whether it be a particular size or scale, or whether it be something else, where would you be operating yourself?
I'm a massive fan of the mid-market and mid to upper market. I'm not talking about literally the median market. If you look at how the UK's evolved, it started with more of the luxury end, full amenity, that sort of like glitzy kind of model, for want of a better word. And then we've seen more and more of the schemes as it's advanced going towards the middle market, where you've got the most renters. Yes, it's not affordable, but it's the market rent that's in the middle to upper market. I think that's where we will see. And then I think it's practical locations. I mean, I don't see it being Melbourne, Sydney, Brisbane. I think it's all down to the local micro market. How close are you to the amenities? What's your local competition like? And that's how I would be picking, rather than saying, oh, well, I want to be in Melbourne, or I want to be in Sydney, or I want to be in Brisbane. I think there's opportunities all across the major cities in Australia. But to me, again, this is just me personally, I prefer that middle market, because it appeals to risk averse investors at scale.
Very granular, data-led decision making. Paul, thank you very, very much. There's plenty of questions there that we haven't been able to get to. Lots of them we'll be covering throughout the day. So please stick with us, and we'll make sure we get on top of as many as we can. Please feel free to reach out to Paul and his team at JLL. They've got a wealth of knowledge and would be more than happy to help you. Stick around. The next session, we're talking to some of the global players operating down under here in Australia. Chris Key from Greystar, Michael Stryker from Sentinel Real Estate, and James Greener at Investor. Once again, Paul, thank you for joining us. I know you're in Auckland in lockdown at the moment, so we wish you all the very, very best. We'll be back in 10 minutes, and we'll see you soon. Thank you.